Well, the Indian rupee has hit record lows today against the US dollar and other major global currencies. There has been a significant downward trend for several years now. At this time last year, one US dollar was worth 86 rupees. Today, it's fetching nearly 94. So from a rupee point of view, that's a nearly 9% drop. And this is what the rupee looks like against the greenback over the past 12 months. And as you can see, there's been an especially big slide since the end of February, when the US and Israel launched strikes that killed Iran's supreme leader. So what is going on with the rupee and what can we expect to happen in the coming weeks and months? Radhika Rao is Senior Economist and Executive Director at DBS Bank in Singapore and joins me live. Radhika, good to have you with us today. So look, firstly, if you're looking at the situation since the Iran war began, how would you explain the sharp drop since then? And what does it tell us about India's financial exposure to a global shock like a conflict?
Thank you so much. So certainly, I think for the rupee, and as you just started off mentioning, the problems kind of predate the Middle East tensions. The currency was weakening in the run-up as well because capital inflows had slowed down, especially in Asia. There's been a very strong AI theme, and you've seen stock markets in the region, especially North Asian markets, get a lot of the portfolio flows, and you've really not seen that interest coming into the Indian markets. Now, going into the Iran conflict, really the downward pressure has increased. I think alongside capital outflows, what you also see is the possibility of a wider import bill, right? In India is a net oil importer, LPG, LNG, all the kind of energy variants, and that really puts the currency as well as the economy in a tough spot.
Yes, so in that vein, do you expect the rupee to continue sliding in the days and weeks to come?
Certainly, I think from the central bank point of view, they have really put up a stiff resistance. There's been a lot of intervention efforts on a very regular basis. But I think this is not only a rupee-specific move. We're really seeing the regional currencies also fall. I mean, to the likes of Thai baht, Korean won, Philippine peso, anything between 5 to 6.5% kind of depreciation this year. And India rupee kind of joins that bandwagon as well. To your point, I would think if until the war de-escalates, I think we are likely to see further rupee depreciation. So, 1 or 2% more is very much likely, depending on where energy prices stabilize.
Yes, and then can I get you to elaborate? You spoke earlier about this lack of capital inflows. What are the conditions that have led to that for India from this sort of longer period of decline? We've seen the rupee come down quite a lot over the past decade.
So rupee, I mean, see, by definition, you've really had the currency. The country runs a current account deficit, and it's been very small of late. Financing has not really been a problem. But what you've seen in the past, say, year and a half, is that there's been a bit of a differentiator between the Asian markets, right? Wherever the relevant themes, flows have tended to go there. So that's why, fresh portfolio inflows have kind of thinned down, especially in the equity markets. I think in the debt market, it's been pretty okay. Rate-sensitive flows have still been coming in. So you've really seen a very, I would say, gradual sense of depreciation. I think overall, there's also a competitiveness angle in the sense that part of this is by design because India is really wanting to also push its esteem as a manufacturing destination.
Yes, so if you're looking from the point of view of India's central bank and the Indian government, would they currently be satisfied at where the rupee currently stands? And as you mentioned before, that its value might just go down a bit lower when compared to the US dollar.
I think what's happened in the past fortnight or 3 weeks is certainly not what the authorities would like. I think the pace has been very fast. I think this year, 2026 calendar year, the currency is down almost 4%. But like I mentioned earlier, it's not the rupee alone, but also the regional currencies. And what you in fact see is this kind of a risk-off driven, fear factor driven, high VIX driven kind of down move you really don't want. I think that's why there's been a stiff resistance. But sometimes it's beyond the policymakers because there is general fear out of emerging markets, kind of relocation, allocation that's going on. And you've also seen yields pick up, for instance, because there are some fiscal pressures, equity markets also correcting. So I don't think this kind of a hastened depreciation is what the authorities generally would prefer.
And if that is the case, then what sort of levers or mechanisms do the central bank and the central government have to put the brakes on the falling rupee?
So we've seen the central bank do a couple of things. I think they haven't really, of course, nothing like what happened perhaps in 2013 or during other crises. I don't think they see reason to put any capital changes or capital control, so to speak. I think you've really seen much of intervention happen. But from the government point of view, there's a lot of risk mitigation measures, especially for making sure that commodity supplies continue. Countries like Norway, US, some Asian countries, Australia, India is looking to diversify its supplier mix and kind of make sure there's enough supply, the fear factor goes away. I think that's where bulk of the efforts is, and some other domestic, rechanneling of supplies. But I think otherwise, I think this is really a very risk-off driven move. So fighting this kind of falling knife, as you would call it, would not yield the necessary results.
Yes, and Radhika, I mean, with a lower currency, there are always going to be pros and cons. Firstly, who stands to benefit most from this?
Oh, I mean, if you see any of the exporters, certainly when the rupee falls to the extent that it does, which is basically dollar rupee being higher, it's certainly exporters who have basically kept this dollar supply out of the market. You've really seen a very one-sided bias, importers trying to hedge, while exporters wait for higher levels to kind of offload their dollars. So, if you talk about any of the exporting community, especially services exports, while they have other headwinds to face, at least on the currency front, they stand to benefit. But at this point, I think the pace at which things are moving, at some part or the other, businesses have been impacted. Raw material costs have gone up. From everything from petrochem to say even packaging material. So I think while we can say notionally a weaker rupee is a benefit, overall I think it does bring a lot of business uncertainty. Nothing like the corporates would usually prefer.
Yes, and do we know, on the ground, when you go to India, it's just, small businesses are like the backbone of the country's economy. You see it once you land at the airports. What are things like for businesses, medium and small businesses on the ground at the moment?
Yeah, certainly. I think, see, by nature, I would say this kind of an headwind, especially when, say, for instance, LPG, there are sufficient supplies onshore,
Yes.
But there are shortages, right? The supplies are coming in with a delay. So you've really seen the smaller outfits, especially, say, restaurants, coming up with a much more trimmed menu, so to speak. I mean, they explicitly mentioned that only certain things are available for the time being. MSMEs can't carry on buying at higher prices, so some of them have temporarily, perhaps, closed operations or gone slow. So everything really depends on how fast we can have a de-escalation. And I think even when the conflict itself de-escalates, supply will take a bit of time.
Yes.
So we are looking at least a quarter of disruptions, at least for the business as well as the consumption story.
Yes, and finally, Radhika, is the value of the rupee an indicator of India's economic health?
Certainly, I think it's one of the indicators. I think if you want a full picture, certainly investors would look at growth. They would look at corporate earnings. The books of corporates are quite deleveraged compared to the past crises. So they have sufficient internal accruals if they want to invest, undertake capex. So I think a holistic picture really helps. But of course, the currency is but one barometer, by how the country is doing. And as I mentioned earlier, taking a currency and keeping it at competitive levels does help in manufacturing in a normal time. We are far from normal at this point, especially in the month of March this year.
Okay, Radhika Rao in Singapore, really appreciate your insights and analysis. Thank you so much.